shared videos on my social handles, but then we are back. So I decided to do some diggings on some things that I've been trying to share with you, and even though this video will not be to give you everything that you need in the forex space, but this is a pointer to you to show you how you can maximize anything you're seeing on your trading view or any chatting platform that you have access to. All right, so I'm sorry if you've all this while you've been the major market liquid provider. I don't know if it makes sense, but then you've been losing a lot of money in the market. You've been providing liquidity for even institutions to trade. Then this video is for you because I've tried as much as possible to help you understand some concepts. Now, some ICT traders, some people who understand the concept of continuation, those who say, okay, I want to be able to predict or give an accurate daily bias. Okay, if a concept where if this day breaks out of a range, I'm looking to sell the next day in continuation of the previous day. If this day makes a bullish indenture, I'm looking to continue in that direction. If this day ended bearishly, I'm going to continue the next day bearish. Now, I'm not going to come here to debunk such trading ideas. In fact, majority of the times you'll be successfully trading that concept. But how do you actually trade? There's a general saying in the market that the wicks of the candle cause the damage and the body is what gives the money. And that is true. Okay, that is true. But what I'm here to show you is a very general trading belief. But now we try to understand what makes the market tick. And like I always say, the market only obeys three things: liquidity, time, and price. Liquidity, time, and price. So I'm gonna just share a little knowledge with you here, and I hope you understand, because this video might not really surface again. So if you're watching this video now, just do well to save this video, share it to whoever you want to share it to, and make sure you follow us so that in contents like this will not escape you. I watched someone's video one time that actually changed my life. It's been years. All right, so it's been years. I watched that video, and that was what brought me closer to forex trade. And I hope that you out there watching this video, you will have something to actually thank God for. Okay, you go back in time and say, oh, thank God I was able to watch this person's video and became a motivation for me to actually persevere and continue in my trading career or journey. But regardless, I'm here today to share with you a little bit of content. Okay, so now I have a trading concept that I call a dealing range. Now, it's a combination of so many things, but this is how you trade. If there's no liquidity, please don't engage in the trade. If you want to engage in that trade, please use the most risk management system you have in place. Of course, by now, if you're a trader, a professional one at that, or an intermediate, you should have a trading plan. For beginners, this is their learning phase, and I'm sure you're gonna blow or you're gonna harm so many accounts. In fact, at the end of the day, you start regretting why you even ventured in this concept called forex trading. But then at the end of the day, when you become profitable, it become a thing of the past. So now this is the candle, the current candle for the month of April, Friday 24th 2026. You can go to your charting software, either the volumetric or trading view, but I use trading view anyways. So you can use it and look at that daily candle. How did it close? My daily candle closed bullish. I waited for the market to close before making this video so that we don't have any conflicting ideas. Now the pair I'm using for this is Euro USD. I'm not gonna change the concept of this. So now so many people might be waiting for a sell on this day just because there was what do we call, there was in this place, let's say this place, the previous day broke out from here. The previous day there's a breakout from here, right? So it's customary for me to say that, oh, the next day will be bearish. If we look left, we see that market has already tapped in. For some people, market has already tapped in to some sort of resistance there, but then that is not our trading concept. Okay, so it's customary for me to say, okay, I'm gonna take a sell from here. All right, let me get this out. But then if we're now looking from here, from the daily angle, we have a very sweet sitting what's it called, fair value gap right here from the daily perspective. All right, from the daily perspective. So wait a minute, let me increase the so from a daily perspective we have a fair value gap. So now looking at this, that gives us even an idea to continue in that direction. Why not look at that daily? What is it telling you? It's giving you an internal liquidity. So we have to wait for a sweep of liquidity under it to guarantee that market is actually going for that internal liquidity. So what do? I step down to the 4-hour candle. Remember, I marked out the previous day's high and low. Okay, I marked out the previous day's high and low, and I come to look for my entry. Always I start looking for entry from the London section. If the London section range and there's a sweep, internal sweep of liquidity or external sweep of liquidity of that range and give us a confirmatory entry, you take your trade comfortably and you wait for a TP. Okay, remember, the wicks cost the damage, the body gives the money. Now I'm just gonna go ahead and mark out the low of these candles like so. Okay, I know at first this video might look so confusing for you, but trust me, is worth everything. Now I'm marking out the low, carefully marking out those low. Let me get this off my chart. So I have this here. Please, if I'm speaking too fast, please do rewatch these videos for clearer understanding. Now I make sure I go to that wig and mark them out correctly. I'm not marking out the body, I'm marking out the wicks. So we want to see, for a bullish continuation, we want to see market. Let me go to the 1 minute time frame. I'm so much in love with 1 minute time frame and the 3 minute time frame, because those ones are what gives you the intentional moves of the market. See how beautiful this market looks. Okay, so market's been selling and selling and selling. This is the previous day's low. So some concepts, you have some concepts where markets begin to do this, sweep the previous day's low, you know, those concepts where you wait for such, then you buy. All right, those are beautiful concepts. Trust me, they are beautiful concepts, but market does not always have to do that. In fact, market does not owe you anything if you don't understand these three concepts: liquidity, time, and price. Those are what drives the market. and I've written a book, like I said, but then I had to, go back and reduce some things. I had a revelation, okay? I had an understanding, a visitation much clearer than what I shared. So I had to review those things. That was why I had to take some time off the social media thing and have to put the videos. So now you have this candle right here, okay? Now on this day, let's see if market actually tapped in any of those liquidity, and market did. Okay, immediately this market opened up. Sometimes it's not always so. Okay, you come to London section, and London section will not really sweep liquidity immediately, but on this case, market came, tapping the first time, pushed up, came back again like this. Now see this big rejection right there. That big rejection is worth your money in gold. Trust me, is worth everything. And there's a secret sauce to this. If you notice, I included a moving average here. Okay, those are part of the secret sauce that I'm not going to share with you on this video, but you can go ahead and make your own moving average. Then there's a tool that I use that will mark out a level here for you. I'm not going to include that here, okay, but this tool would have marked out this level for you here. Okay, so immediately you come here and market does this. Why not enter your trade? Now I'm entering this trade with several confirmation. First confirmation is market has already swept liquidity. Why is it sweeping it? Because it's tapping on this liquidity level, and market is taking every stop loss that has been placed at that level by this move. So immediately market invalidated this move, it pushed up, and pushing up and is finding support at this moving average. I will just simply enter it here, keep my stop below here. Now look at the beauty of this stop loss, 5.2 pips. 5.2 pips. I'm gonna keep my take profit around here. Now you can target here if you have the conscience and the peace of mind to hold it to that level, which I clearly do not advise. I'd rather let you take out your tool here, mark out the recent level, liquidity level, mark it to the external liquidity, and take 0.5 in such scenario. Now you have to understand some things. You have to understand the pair that you trade. How many pips does that pair deliver in a day? If you trade gold, how many on average, how many does it provide in a day? That is what gives you your detailed risk to reward. You don't just trade, because you have to understand these things, and these are the things I explained in my book. Okay, so now look at this trade on Friday. Look at how beautiful this market was. This is how beautiful the market will ever be. A market rallied and rallied just because it swept liquidity, and there is a daily fair value gap sitting just above that liquidity level, and market did what? Market went and violated it. In fact, markets went straight for it, and you notice when the market took that liquidity level, it began to range and range and if you are in this market, you might get stopped out because you waited for market to break out of this place and you enter it just because it has broken out of a daily level, and you enter it, keep your stop maybe probably below here, okay, and market will hit your stop loss, came back again, give you some entry here, you take a sell, it will go and hit your stop loss again, and you just be wondering, in a day you've lost almost the entire capital you've made for the previous days. So this becomes how you actually look for trade setup. Now let's say, because we wanted to trade Continuation, previous day ended bearishly. The contract was bearish. Now, what would have expected market to do is market not to sweep this liquidity, but if it does sweep the liquidity and continue to get here, maybe the market gets to this place. Let me sorry about that, let me get it off. Now let's keep this here. Now immediately market sweeps this liquidity here like this, continue to buy, then does this again, okay, give you some sort of manipulation right here, and it falls below this moving average. In fact, take your sell and hold to clear this level, because why is because this liquidity level is not enough to hold market to drive it up there. These are concept of draw on liquidities. There are so many things that I'm not sharing with you, like I said, but because of time, I don't want to keep you here and bore you out. Okay, so now market has already swept this previous liquidity level that we founded on 4 hour candles. Okay, so now, and market has already done this, and there is a change of character around that level. Let me see if I will get something better to represent it. Okay, let me go to geometric shapes. So let's say around this level, okay, you get an M pattern right there. A market do market structure shift or change of character, enter yourself from there. Maybe the market does this, come back and clear this leg again, enter yourself from there, keep your stop loss just after the immediate high like this, and so far the moving average is there, hold your take profit to that level, because market is already giving you a level to trade, and you will enjoy that market because now you are in the distribution phase. Everything aligns: accumulation, manipulation, distribution. This will help you understand and see the market for what it is. You can do this in the weekly, you can do this in the monthly. In fact, you can do this in whatever place that you wish to do it. But once market is in the distributive phase, market goes straight to the draw on liquidity. In fact, it barely has any further retracement. If it does retracement, it's just few times and it continues in that direction. So until next time, guys, keep delivering and keep enjoying your take profits. Peace.